Hi everyone, I'm super excited to host Jenny Song, partner at Navitas Capital. Thanks a lot for being on the show.
Love to be here.
Jenny, take us back to your early career days, and from that point to the today, what would be your top career highlights?
Top career highlights. I had a very circuitous, I think, journey to this seat, which is, being an investor in a built world focused VC. I don't think I would have ever imagined being here. I started my career really thinking I was going to be a writer and a journalist. I went to school to study journalism. Everything that I worked on, from an internship perspective or a resume perspective back then was to build my, set of portfolio focused on writing. I ended up having a couple of internships in areas that kind of influenced ultimately what I ended up doing. Some of those were related to business reporting and really following, different companies and market trends. But then I also had an interest in political reporting and kind of social issues reporting. And so I was torn between ideas of private sector versus public and social sector. I graduated into the Great Recession, and it was kind of a terrible time to become a journalist at the time. So I ended up pivoting and joining a consulting firm, to get business experience. And I had the hypothesis at the time that if I had business experience, it would be easier for me to enter into a leadership position into some sort of impact focused organization. So I spent the first 6 years of my career actually at Bain and Company in consulting. I spent a lot of time in that in impact and education actually. And then when I left Bain, I had, I wanted to ended up being a founder. So I wanted to lead an impact organization. I ended up creating this education technology startup, which was a nonprofit, but we raised venture philanthropy money for. And then I ran that for a couple years, really on the operator side. After doing that for a little while and realizing, it wasn't scaling in the way that I expected it to, and I knew it, kind of needed to find a graceful landing spot. I ended up just having a lot of conversations in the market about different opportunities that had this sort of intersection of impact and growth. And I became more and more interested in technology and innovation. And I kind of by happenstance, landed on meeting the team at Navitas. And I actually didn't have any real estate or construction or built world experience prior to that. But what was really compelling was, that intersection, I would say, of having an impact on the world. The built world is where we all live. There were so many intersections with themes that I really cared about, like housing affordability, like climate, really the environment that we live in, and the ability for technology to accelerate change in those areas. And then I really loved Navitas's thesis, which was, in my view, a little different from other VCs. It was deeply focused on understanding the industries. It was focused on really working, very hand in hand with founders and hand in hand with the industry. And so I basically just decided I was going to try it and see what happened. And now I've been here for about 6 years. And I would say the built environment is such a broad area. And so there's so many niches in it that I still don't feel expert in any given one, but I feel, very much more at home, in this set of industries now than I did, when I first started. In terms of career highlights, though, I mean, I think they're quite varied. I actually am very proud of the ed tech startup that I founded. It's called Noble Forward. We actually did open a hybrid college on the southwest side of Chicago. Still exists and serves, hundreds of students. There's a physical campus that we built. There's always a tie to the built world. And then, early in my career, I'd say I had the opportunity to report on the Obama campaign back in 2008. I was part of the press pool. I sat, in the little media van that followed him everywhere in Chicago. We got to write, not the most hitting political stories because I was an intern, but, got to follow him around and report on his movements. So lots of different things. And then now, there's some things I am very excited about that we've invested in the last couple of years. I can talk about all of those portfolio companies to no end. So we can go into that later. But lots of just really exciting things, both the beginning and the end, because I'm really just middle. But yeah, lots of highlights, I think.
Yes, quite a diverse set of skills and industries you navigated. I'm curious to know, like, what were the set of skills as a founder and operator that got translated into the VC world, and what are the things you had to learn from scratch?
The interesting thing about having been a founder, having been a consultant, having been really a journalist is that I draw really heavily on all of those, in my venture work. I think having been a founder, you really do have a ton more empathy for what founders are going to through. And I think realism around the decisions and the priorities and, how these things do play out day to day. And you really do realize how much how many different fronts, a founder is battling. And then, translated to investment decisions, it's kind of like a big thing for me is how many fronts is this startup waging a war on, and is that appropriate for the amount of resources they have, and are they well suited to fight those on all those fronts? I think for me, one of the biggest things that I learned firsthand on the founder side was one of the reasons my startup, did not scale well is I really underestimated the cost of customer acquisition when we first set out. And we really felt like because we had this channel partnership approach and that we were going through other entities to recruit our students, that our CAC, our customer acquisition cost, would be close to nothing. And that didn't end up being the reality. And it really obviously had a massive impact on our unit economics and then our ability to actually grow and ultimately to scale. And I think that's a theoretical thing for a lot of people, but when you're in it, you just really realize how fundamental that is to the growth of a company. And so I think as an investor, I index very heavily on that now, more so than maybe others. And so when I look at pitches or I'm working with portfolio companies and they're telling me my CAC is zero because blah, 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 I'm like, that's never the case. It's just, it can't be true. Let's really understand what your go to market is and how that's going to change over time, because your CAC in day one is not going to be your CAC in day 200 or 5,000 or whatever it is. So there's certain experiences like that that do color, how the lens in which I look at companies. But yeah, I think, having been an operator, there's a certain set of things, but having been in consulting, there's a set of things as well. The consulting skill set is a bit more high level and strategic, and where do I think the market is going to go, and what do I think the competitive dynamics are ultimately going to be, and what's the business approach. And then the journalism actually was very helpful from a content and writing and marketing perspective, which I think I underappreciated before being in the VCC. It is such an important part of being in the market. And part of the reason I'm here, right, is to continue telling the story, of both our firm and what we care about and our portfolio companies, but then, to have that, engagement with the startup community and have them be able to find us and for them to feel like whatever we're saying is resonating with them and therefore they should work with us. So anyway, I think I wouldn't have constructed that set of experiences intentionally because I wouldn't have known, but it turns out that having had sort of those three different phases of my career, if you will, have all been incredibly helpful in my life right now.
How does a week in your life as a partner look like?
Oh my gosh, it's different every week, so it's hard to articulate that. Maybe I'll talk about this week, right? I spend a fair amount of time with my portfolio companies. So this week I have a board meeting tomorrow, for example, that I was just prepping for. I had calls with two of my other portfolio companies yesterday. I have another call this afternoon with one of my founders. Some of them are reacting to things that have happened. There's been, some news and we need to talk about it. Others are more regular check-ins where we're just trying to see if there's ways we can help and things that we can work on together. Mondays, a lot of other venture firms are like this. Mondays are a deal review days. So we're usually prepping, Fridays and ahead of Monday for our weekly meetings where we talk about our pipeline and everything that we're investing in. So most of yesterday, Monday, was focused on that. And we have a deal that we're working on right now where we, very excited about it, ready to issue a term sheet. So a lot of discussion on that. And then also, deals that are slightly further in the pipeline. And then what else? Obviously, a lot of startup pitches, they get sprinkled in. We typically do 30-minute initial pitches, intro calls, and then we'll do deep dives that are 45 minutes or longer. So already had a couple of those. Then there's conversations with other co-investors. Got coffee yesterday with co-investor here in Chicago, which is where I sit. have another, coffee coming up, Zoom calls, all that stuff. So it's very back to back. Like calendars are very full. Oh, and then earlier today, we just had an hour meeting with one of our LPs. So at Navitas, we primarily have corporate LPs, and a lot of what we do is sharing with them what we're seeing in the market, helping them think through technology decisions, all that. So we had a hour update with a LP as well. Anyway, this is a bit scattered, but you can see there's just a lot of different folks that we're engaging with, right? It's our existing founders, potential startups that we might invest in, it's co-investors, it's LPs, it's our team. So it's definitely a lot of kind of like relationship management then, but working through issues with any of them. I happen to not be traveling this week, but a lot of weeks I am on the road. A lot of our team is on the road actually this week, which is why I'm working from home today. But it's often going to visit. Similarly, it's going to visit our companies, going to see startups that we might invest in, conferences, and other things. So no week is no 2 weeks are the same, but it tends to be very kind of networking and relationship driven.
What's a good stage of the company sector for a founder to reach out to you to pitch for fundraise? Like what's a like profile that matches your thesis?
Yeah. So at Navitas, we're all built world. So everything from mortgage tech to construction tech to core prop tech, anything that really has to do with real estate construction. And then now for us, also energy and infrastructure from a scope perspective. And then we invest primarily from C to Series B. We do invest sometimes in companies that are earlier in that. And then we like to meet founders as early as possible. So even if you're a pre-seed founder, sometimes it makes sense to start establishing that relationship, and we'll get to know you over time. It's very rare that we will make an investment at a pre-seed or seed after like one meeting and the first time, that we've met someone. It takes a little while. We have a very concentrated portfolio. So we don't work with that many companies, which means, each founder or set of founders that we invest in, certainly we've gotten to know them over a period of time. The other thing to know though is, there are a lot of founders that are working on things that I would say, even if they're in scope, they may not be the right fit for us from an investment standpoint if they're really, really deep tech, I would say, or like actual operators. So if you're actually building buildings, or if you're actually, let's say, a property manager, or, really like a tech-enabled sort of real estate company, we typically don't invest in those models. It's not to say never, but like we tend to mostly focus on kind of the software layer or tech-enabled services that are around the industry. So we probably won't say no to a meeting, but just so you know, when you're pitching, that's likely. The final thing I'll say, just if you're interested in getting in touch, is like be aware of what we have invested in. Our portfolios are available online. Just take a look. There are a lot of conflicts in terms of, people might be working on something where we have an existing portfolio company working on the same thing. In that case, it's in your benefit to not share too much information with us. We will take a meeting, and we probably won't share anything confidential with our portfolio company. Like, we don't want to be a bad actor in the space, but it's kind of up to you to also like know that when you're pitching a VC. And there are VCs out there that will, I think, purposefully try to get as much information from you as possible, and then just like share it directly with their portfolio companies, which is like not what you intended.
That's a great like insight for people. Like even some people think like, okay, let's just meet. You never know, they could make intros to potential customers or they could invest, but there are also implications.
Yeah. And we do so outside of conflicts, even if we don't invest, we definitely can make introductions and be helpful. It's actually like relatively often that there will be cases where our LPs, right, are looking for a solution in an area. We might not be interested in investing because of some other reason. Maybe it's market size or something else, but that doesn't mean you couldn't be a good solution or vendor for our LPs. So we will make those connections and even advise our LPs to work with specific companies where we feel like the team is great. So it's still worth having, conversations, even if it's not funding, but just be careful from a conflict perspective.
You mentioned about customer acquisition cost. From your experience in construction tech, what has been like the go-to-market motion that's working well? I know it's contextual depending the ICP and the startup, but like some learnings or trends that work well?
Yeah, that's a good question. I don't know if that there's a blanket answer. One of the things that's interesting about construction tech is construction is such a large market in a lot of ways, but it's also made up of a lot of niches. And one thing we found is that it's important to think about as a construction tech company, are you an enterprise company where you're selling to the C-suite and it's really for the largest general contractors, or 400? Or, is this a solution that applies to the mid-market and SMBs and to subcontractors and, all the small providers in the space? And then just for the go-to-market really to be matched to that. I think that historically it has been hard to scale if you only can be a solution for enterprise just because there's not enough players in the market to sell to at high enough ACVs. So, the very successful construction tech companies that we've invested in, PlanGrid, for example, is one of them, very strong field based go to market, really bottoms up type adoption. Document Crunch is another one where, they obviously have an enterprise strategy and enterprise accounts, but also a lot of their adoption is in the mid market and SMB. And it's this product that's really well suited to it. And they're in the field, they're partnering with trade organizations, they're, in the various markets organized in a way where they can be in person and face to face with their customers. So there's not one solution, but I think thoughtful sort of approach to the field game versus, the enterprise game and thinking through, is it a project based sale versus a enterprise based sale? All of those things, are things that like we look to founders to be thoughtful around, but we also partner with them to think through.
According to you, what area in built environment tech is oversaturated and an area which is undersaturated?
Oversaturated. Well, we do see a lot of companies right now that are focused on very similar things as it relates to the AI layer for construction. So there are a lot of kind of knowledge graph companies for construction that are sort of organizing the data to construction. I don't know if that means it's oversaturated because certainly adoption's not that high yet. So there's a lot of white space, but there's definitely a lot of people working on that problem. So it feels like there's a lot of noise. The other area that has gotten just a ton of attention and funding recently that, has been a bit of a interesting area to see is around takeoffs. That's been a hot area. It makes sense. At the same time, we haven't made an investment in that area because we're not convinced yet around the size of the opportunity and the applicability of these takeoff solutions kind of across different segments. What's undersaturated? I think things with a physical component are still very early and not yet saturated. I think these are areas in, let's say, robotics, where I'm surprised we haven't seen further progress, I guess I would say. Obviously, robotics in construction is just way more challenging than robotics in manufacturing or other segments, but I think it's relatively uncaptured in a huge space. Those are my initial reactions.
What are some expensive mistakes you've seen founders typically make?
Definitely scaling up go to market teams without really nailing the strategy behind it. I think sometimes people jump from founder led sales to a huge team of AEs too quickly. I think it's hard to hire AEs that really understand, startup and tech sales for construction. There's now a good wave of them, I would say, that have come from the PlanGrids of the world and the Procore's of the world, et cetera. But even they, are used to selling a type of system of record that is very different now from the AI solutions and other solutions that are out there. And so, yeah, I think I've seen a lot of companies just blindly throw bodies at sales and think that that will result in something. But I think until you really figure out the best messaging and the best channels and all of the aspects of go to market that we were just talking about, those end up being relatively wasted dollars. Yeah, I think the other thing is in construction, there has also been a lot of startups that have had, a need to build up more of the physical components. So if you think about all the offsite construction companies, just using venture dollars to finance building warehouses and building manufacturing sites and things like that. I think it's kind of proven out that it hasn't really worked well. So I think if founders have that component and what have to build now, there's just a need, I think, to find different pools of capital to do that. Even if your first, couple million are related to that, then how do you use that to build the proof points to be able to raise, new types of capital?
I see. I see YC releases like call for ideas with various sectors.
Hmm.
What would be Jenny's call?
Let's see. Say right now, a couple of areas that we're interested in. We're very interested in anything that has like a services component to it that is automatable by AI. So think like AI property accounting, think AI utility billing, things that, typically would be handled by an outsourced, consultant or accounting provider or something like that. The other one would be like AI environmental remediation or environmental consultant, things like that. So definitely interested in those. Um, Other than that, I mean, I think we talked about sort of we do things in mortgage and financial services, as well as kind of core prop tech, construction tech. We definitely have our eye out for sort of interesting, similar idea, like some not necessarily software players, but AI, let's say brokerages. So, if you're an AI lender that is operating a brokerage model, mortgage or an AI, insurance kind of brokerage layer. So those would be a couple. I think in general, right now, it is a little harder to get funded if you are simply an AI for X. Increasingly, I think you have to actually take on the work. And so that's kind of why I'm seeing these things where it's actually the service provider and not just the technology layer. And that is a whole different type of business and a different type of risk and all of those things. But very interested in all of those. We made an investment last year in an AI back office services provider for HVAC and plumbing. And we're seeing, some of our theses play out in that in terms of, the ability to own the actual work, high ACVs, ability to penetrate the SMB segment and all of those things. And so I think, yeah, we're looking for, similar things to that, but in other segments too.
God, great ideas for someone listening to build in this space. If you have a superpower that you can take one initiative that can increase construction tech adoption, what would that be?
An initiative that would increase adoption? Maybe it's like AI, like pilot manager. I think that like a lot of construction firms are actually super interested in the technology that's out there, but it is hard for them to pilot multiple things on different sites, for example, and like actually measure how well they do and set things up and teach everyone and all of those. So if there was like an automated way to like run pilots, right, in a simulated or real environment, whatever it is, I think that would be interesting. The other thing is probably something around systems integration. Time and time again, you hear the CTOs of these companies, especially in construction, talk about the fragmentation of systems and just point solution fatigue. And even though startups tend to be integrated to Procore or integrated to Autodesk or whatever, there's still just this like lack of visibility across all of your systems. And so, yeah, I guess it's an AI systems integrator effectively kind of across things so that, it's easy to test and deploy startups in a safe and stable environment. I don't know. I guess those would be those would be my two wishes.
Anything you learned the hard way in your VC career?
Yes, many, many hard things. I mean, I guess I would highlight two. One is, things that are based on transactions are always going to have a lot of risk and be very challenging. I personally also like led, an investment in an area where it was related to housing transactions, for example, right? And very not just dependent on that from a market perspective, but actually very dependent on that also from a capital perspective. And, when the market turned in 2022, 2023, or whenever it was, there was just like no future ahead for that company. And even though there were so many great things about it, actually their CAC was amazing, all these things, the impact of cyclicality was way bigger, in this startup than it would be in some other maybe business models or situations. So I think understanding cyclicality and, how different economic impacts either are lessened by the way that this company operates or actually magnified and it's sort of, disproportionately impacted by some of those things is really important. And then the other one is, yeah, just taking the number of risks that you take on an investment and are you betting on something for the market to mature or is the market already there and you're just betting on adoption versus all these different things. We've made some, I would say, investments in kind of climate related things, right? Where it was not just a bet on that technology and that founder and that team and all those things and market adoption, but it was also a bet on the size of the market being much bigger in the future than today because of the energy transition and adoption of electrification effectively. And a lot of those things just haven't come to pass, right? All the experts predicted blah, 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 but for regulatory reasons, for preference reasons, for economic reasons, we don't have the same penetration of electrification as we had predicted, all the charts predicted 2-3 years ago. And so, yeah, just really breaking down doesn't mean that was not a good investment at the time, but really breaking down like the number of different risks that you're taking and do they all compound when you make an investment?
Yeah, there's so many factors to consider. I have a rapid fire round. You have less than 5 seconds to answer. You have to keep it super brief.
Okay.
What's your favorite restaurant?
Oriole in Chicago.
Your role model?
Oh, my role model. Oh, I don't know. My mom, probably.
Any
My
book
mom
which
is me, so she's pretty smart.
nice? Any book which made a big impact in your life?
Recently, it's a book called The Candy House by Jennifer Egan. It's about a post-apocalyptic future that feels like reality right now. So
Amazing. Your favorite movie?
my favorite movie, probably it's so weird. The Witch. It's a horror movie. I'm a big horror fan.
A city which is in your travel bucket list?
Probably like Kyoto or something like that.
What's the best piece of advice you have received till date?
I think it's just like being open to serendipity. Like I kind of mentioned it before. I just not trying to plan out everything so much to, a crazy extent, like letting things kind of happen and see how they go.
What would be top 3 conference you highly recommend for a founder to attend?
Well, Blueprint, which I think most people know at this point. I think Built Worlds is good as well. So we always go to Built Worlds. And then I don't know what the third one is. It depends on your segment. In the home building segment, there's the, International Builder Show. We have an LP in Ivy Zellman, and she runs a home builder summit that's also really well attended. If you're on more commercial real estate or multifamily at MHC, I'm going to ICSC this year, which is the big retail conference. So maybe I'll see some of you guys there in May.
Great. Jenny, anything which we didn't cover in this interview and you'd like to end on that closing note?
Just that I think it's like a super exciting time to be a founder these days. Every founder in our portfolio is just raving about how much of a step change there has been in terms of the ability for AI to help them in their builds. And so I do think that really favors founders who know what they want to do, who are close to the problems, who can, translate those into real, value in the products that they build. So yeah, it's a great time to be a founder.
Amazing. It was great hosting you, Jenny.
It's great to be here. Thank you so much.